Oh, hi. I'm a smart investor. I dare say that because I understand the cryptocurrency markets and I am up to date on every new development, fintech and blockchain ecosystem. All because I watch the Inside Blockchain show on Crypto TV Plus. Every Monday morning, Crypto TV Plus brings you news headlines of top stories, interview with an expert, and give you detailed market analysis to enable you make the right business moves. Now you too can become a smart investor if you don't miss it. The Inside Blockchain Show, only on Crypto TV Plus.
Hello and welcome to Crypto TV Plus. This is Inside Blockchain, your one-stop for everything blockchain and crypto. I am your host, Faith Ekwari. If this is your first time watching this program, make sure to follow us across all social media platforms and subscribe to our YouTube channel to stay updated in the ever-evolving world of blockchain and cryptocurrency. Do well to turn on your post notification button. Now, we can say it is a miracle that the United States financial system is still standing. Over a week ago, the US experienced its second and third ranked bank failures in US history. The Silicon Valley Bank and Signature Bank collapse left multitudes of individuals and startups distraught and devastated. Founded in 1983, Silicon Valley, the 16th largest bank in the US, has supported and catered to over 30,000 entrepreneurial companies, including some of the popular technological companies today. By the 10th of March 2023, the bank was seized by California regulators, leading to panic among customers and investors alike. The bank has suspended all its activities on social media platforms. Now, following the Silicon Valley Bank collapse, Signature Bank was shut down as regulators warned that keeping the bank open would threaten the stability of the financial system. Now, Signature Bank, which was founded in 2001, offered business and personal banking products and service with a focus on lending and deposits. And in 2008, it opened its doors to cryptocurrency activities. Now, amidst all of this drama, the second largest stablecoin, USDC, from Circle Internet Finance, Depeg from the dollar and fell as low as $0.94 since its lowest level in April 2021. Now, the US government has shown interest and support for those who are victims of these bank failures. However, many have continued to contend that these bank failures happened as a result of their overexposure to assets that came under pressure when the interest rates are hiked. Now, on the flip side, Bitcoin price seems to be moving upwards. Today, we'll touch on all of these topics, from the Silicon Valley Bank collapse to Signature Bank collapse and its impact on stablecoins and the crypto market, and if we are actually moving towards a bull run. Now, the conversation is packed and I can't wait to get into it. Make sure to invite your community and subscribe. Let's go on a quick break. When we come back, we'll dive into the conversation. Don't go anywhere.
Welcome to the weekly news update here on Crypto TV Plus, as it is the 13th of March 2023. I'm Nikki Oshini and these are the headlines. CBN has directed banks to dispense old Naira notes, former CBN Governor Soludo claims. UK's Silicon Valley Bank sold for just £1. Binance CEO announces recovery funds conversion from BUSD to native crypto. South Korea launches Metaverse Fund. US regulators shut down crypto-friendly Signature Bank. Euler Finance hacked for over $195 million in flash loan attack.
Don't get stuck in the past. Get all the latest news and happenings on blockchain and cryptocurrency, only on Crypto TV Plus.
Hello, my name is Chiki and I'm the Bull of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that dial. Peace.
Welcome back, everyone tuning in from around the world. This is Inside Blockchain Live on Crypto TV Plus. I'm your host, Faith Equari. If this is your first time watching this program, make sure to follow us across all social media platforms and turn on your notification button. Now, today we're having a very important conversation. We're discussing the Silicon Valley Bank collapse, the Signature Bank collapse, and its impact on stablecoins and crypto markets. And on the side, be asking the question, are we heading into the next bull run? Today, joining us is a blockchain analyst, Maria Eneva Holmes. And also joining us is Tolani, who is a financial analyst, a blockchain analyst, and also part of the Global Women Alliance, Blockchain Women Alliance. And also joining us is Faith Titus Okafomba, who is the CEO of Synergy Data Technology Company. Thank you so much for joining in, ladies. We're so glad to have you here today.
Hello, Faith. Thank you for the invitation.
Amazing. It feels great to have all amazing women here. So let's start off with the conversation. So first off, Maria, let's start off with you. Let's get into the backstory of why Silicon Valley Bank and Signature Bank failed, looking at how these collapses have been tagged as the second and third largest bank failures in the US history. Let us understand what happened.
Yes. So what happened this week was quite crazy for a lot of startups, I would say. So imagine having your money in a bank. You just received a large investment and you're planning to use this money in the next year. And then suddenly you hear that your money is not secured anymore and you cannot access it anymore. So what exactly happened is basically a chain of events. So first of all, the Silicon Valley Bank, what they did is in order to secure the money that that their clients are holding there, they weren't investing in fixed income products. And as we all know, the interest rates in the past years, so following up the financial crisis, were very low because all economies were trying to make people spend more, make people take more loans in order to spend more. So by investing in fixed income products with basically treasury bills with low interest rates, that was the strategy of the Silicon Valley Bank and how to secure the money of their clients. However, what the American government did in the past few months was to increase these rates. So now we have a situation where we have fixed income products that are much more attractive to investors with higher interest rate compared to the low interest rate, which the Silicon Valley Bank bought these fixed income products for. So right now we have a situation where the Silicon Valley Bank actually has a losing product in their portfolio. And what was happening is that they were forced to sell some of these fixed income products because their clients were trying to get their money out of the bank. So in order to actually serve these claims, the Silicon Valley Bank has to sell some of the fixed income products they were invested in. And this led to actual loss that they incurred on their balance sheet and of course to a liquidity shortage. Which means, basically, in a nutshell, that they had a bank run where all or a lot of their clients were running to get their money. The bank could not serve all of these claims, and then in the end, they basically were insolvent. So this is in a nutshell what happened. And in such situation, I would not say that it's just one reason that led to this. That was the main cause that caused the bank run and that caused the insolvency of the bank. But it's a series of events. For example, a lot of startups have currently difficulties of raising more funds and of accessing capital. So this is one of the reasons why they were trying to get their money out in the first place. So another reason is, of course, the reason of trust. So if your clients as a bank do not trust that you can secure their money and you can serve their claims long term, they would want to get their money out. So there are like several reasons that played a role here in the collapse of the Silicon Valley Bank.
Amazing. Thank you, Maria, for that. Faith, let's get to you. I want you to lean in on that conversation, lean in on that part. What really happened with the Silicon Valley Bank insolvency and also Signature Bank? And, you know, a lot of attacks have been thrown towards the crypto industry, as many has packed it as, you know, the transaction as the reason why these banks went insolvent. How true is that? Why do you think that the crypto industry, the crypto activities are part of the reasons why these banks went insolvent?
Well, my co-speaker has actually said virtually everything that happened, as a result why the Silicon Valley Bank, collapsed, as well as the Signature Bank. But before then, I want to say that before then, these banks, they were actually performing very well, right? And say as of September 2021, they had a total asset of over $98 billion, and this was for SVB. And as a result of the startup, boom run, the bank actually became very, very liquid in capital. But however, as time progresses, it came to a point where they have to, sorry, Siri, please stop it. So time came when everybody needed to have access to their, liquidity. And as you know, everybody can't really get money out of the bank at once. And once that happens, it's going to cause to a cash shortage, which was what actually happened. And as a result of that, deposits weren't coming in as much as they would have been coming in. And from their balance sheet, it was reported that SVB had about $173.1 billion in their deposits, and because of that rush in people trying to withdraw their money, deposits actually went down to about I would say, I think about $164 billion, so when this happened, there was no much cash for them, to be able to match up to their capital ratio in the bank. And again, the Federal Reserve Bank had to come up with interest rates hikes, and that also affected the collapse of those banks. So it's actually quite crazy to witness something as this in this period of time. I would like to also go on to say that it's really quite unfortunate that that's actually happened, and the collapse actually cannot really be said to be caused by crypto transaction, because that they were a crypto transaction friendly is not as a result of why they went insolvent. Insolvency in many banks can actually be caused by different factors. It can be caused by the factor that maybe out of poor management of finances. It could be out of poor investment, decision making. It can also be as a result of policy, by regulatory authorities. So most of those things actually would have contributed to the reason why the bank actually collapsed.
Chalani, let's get your take on it. Now, a lot of attacks have been thrown towards the crypto industry, as many has pegged this transaction as the reason why these banks went insolvent. How true is this, and what is the reason why these banks went collapsed?
Thank you, Faith. Like the two other speakers have said, there are several reasons why we have seen this situation that has unfolded in the last couple of weeks, days leading up to weeks now. Several macro and microeconomic factors. One of which is the Federal Reserves in America hiking interest rates, which was born out of inflationary reasons, post, pandemic factors, as well as a dwindling economy. And when interest rates, are hiked, then there's a ripple effect on the value of investments. And several things come crashing as a result, depending on the sort of projections you have on these investments, whether they're short-term investments, mid-term or long-term investments. And as we know, banks traditionally hold a little bit of cash and invest the other portion of their various the deposits from various clients. SVB and Signature Bank have majorly tech, clients. I mean, the SVB, Silicon Valley Bank, caters to companies who are in the tech space and a little bit of life sciences. I mean, tech is, it's a whole value chain. It's not just cryptocurrencies. Signature Bank, on the other hand, actually caters to a niche market in the law and real estate, accounting firms. So you would see that it's not only crypto, or it's not only the crypto market that those banks serve. However, they're quite friendly to crypto related transactions, and they have a few crypto, bank customers. Now, the value of assets that were attributable to crypto was only about $16.5 billion, which is only about 20% of the deposits, the client deposits of Signature Bank, for example, which stood at about $99 billion. So you'd see that the crypto market is not responsible. I mean, there is a relationship because, they were friendly, and they had a crypto arm, where they supported crypto businesses and allowed crypto deposits and transactions. But it's been a combination of reasons. And the ripple effect of what happened with Silicon Valley Bank spiraled into Signature Bank, and the Federal Reserves, the regulators in America, swung into action to stop a wider industry effect.
Thank you, Talani, for that. Maria, let's get to you. Now, despite President Biden's reassurance, how safe do you think customer and investor funds are looking, especially looking at the gravity of this collapse? How safe do you think their funds are?
Well, of course, now we shouldn't speak only about the US, right? Of course, these two banks are in the US, but in general, the role of the central bank in a country is to make sure that the deposits of any banking client are safe from up to a certain amount of money. For example, in Europe, the European Central Bank secures deposit up to 100,000 euros. In the US, this limit is $250,000. So in this case, if you're a client of any of these banks that are filing for insolvency and you have up to $250,000, this means that this money is secure. So you will have access to your money. However, if you have above this amount in your account, this money is not secured. Biden said that even this money will be secured, so over 250,000. He said that it would come from a fund that is set up to secure this money. However, I must say that there is nothing certain here, because one of the main things in the banking industry is that you have to really have the trust of your clients if you don't want them to run away from you. So right now, I think what Biden is trying to do is basically plant this seed of trust in the banking system and say that these deposits will be secured even though they are above 250,000, which is actually, I think, most of the clients of the Silicon Valley Bank have deposits over 250,000. So of course he has to say that, otherwise I think hell will break over the US. However, I don't know how true that is, if I have to be honest, because the money has to come from somewhere, right? And if the money is lost, or there is not enough liquidity, then where do you want to get this money from? So I must say that, yes, they're reassuring the clients right now, but I guess we will see with time if they can really make good on these promises.
Amazing. Let's go on a quick break. When we come back, we'll continue in the conversation. Don't go anywhere. Stay with us right back.
Searching for target. Target found.
Hey guys, welcome into the metaverse on Crypto TV Plus. In today's video, we're going to be taking a portal into the Robo Hero metaverse. Let's go Robo! Robo Hero is the first play-to-earn mobile game with a metaverse built on the Terra network, where gamers can have a good virtual experience while making money. It was developed by 3 blockchain professionals with insight into trading and crypto markets.
Don't get stuck in the past. Get all the latest news and happenings on blockchain and cryptocurrency only on Crypto TV Plus.
Hello, my name is Chiki and I'm the Bo of the Bullet.
Keep watching Crypto TV Plus.
Don't touch that die. Peace.
Welcome back, everyone tuning in from around the world. This is Inside Blockchain Live on Crypto TV Plus. We're having a very important conversation today, and it's resonating around the Silicon Valley Bank collapse, the Signature Bank collapse, and its effect on stablecoins and in the crypto market at large. So let's get to you, Faith. Recently, the Federal Reserve has been aggressively raising interest rate hike to slow down the economy. Do you think these interest hikes are the reason for this major crisis we're having today?
Well, thank you very much for that question. But before I go on to that question, providing answer to that question, I would like to correct the first statistic that I gave about the collapse of the SVB banks and Signature Bank. I really want to go through the story behind the insolvency, and that was as a result of abundance capital, like I said earlier, and funding over the past years because of the boom in the startup ecosystem. This meant that startups had to, make more money and deposit those money, and at the same time they needed to borrow their money. And at the end of 2022, SVB had $173.1 billion in deposit and had only 74.3 billion in loans, and stated in their balance sheet. So with these deposits having tripled in the last 2 years, given that banks actually make money on differences of the interest rates that they pay to depositors as against the interest rate they receive from borrowers. So unfortunately, there came that sudden change where the microeconomic system of the world and its financial system, started deteriorating, which actually brought about the challenges of 2 major problems. One, which was liquidity shortage, as I mentioned earlier, and at this point, startups needed to withdraw cash faster than anticipated. So deposits went down from $198 billion in March 2022 to $165 billion in February 2023. Okay. So the aggressive interest rate hike that Federal Reserve Bank actually introduced in the bid of combating inflation also made the value of SVB purchase bonds at different peak prices. At that point, their bonds and treasuries had to go down in value. As a result, they were forced to sell parts of their portfolio that was liquid and available at that point at a loss of $1.8 billion, to be able to raise cash. So unfortunately, the cash they were able to raise at that point was not able to match up the bank capital, as I earlier mentioned, meaning that SVB needed to raise more capital to, remain solvent. So in an attempt to raise more capital this became unsuccessful and actually prompted the regulators to intervene, And at that point, so the, I would also say that, by answering the second question that, I can't really say with certainty whether customer funds in the, Signature Bank and XZB Bank are actually safe, as a result of the interest in the, as a result of the hike in interest rates. Yeah. So I can, like I said earlier, I can actually say that the factors that actually contributed to the collapse of these banks may have been part of the interest hike by Federal Reserve, but however, as I did mention earlier, these factors that actually resulted to the collapse of these banks could be as a result of fund mismanagement. It could be as a result of, a poor decision making in investment, or maybe as a result of giving out low interest-free, loans to borrowers. So one can actually say that the interest in the interest rates hike by Federal Reserve Bank actually has a contributory factor to the collapse of those banks.
Thank you, Faith. Tolani, many are beginning to question the stability of stablecoins as USDC stablecoin Depeg amid the Silicon Valley Bank collapse. What really happened? What effect happened on the stablecoins, and how stable and dependent are stablecoins right now?
I started by saying that stablecoins are a type of cryptocurrency that are backed by an asset and designed to maintain a stable value, right? And there are a few, mainstream ones like USDC, USDT, and the Binance USD, right? The USDC is backed by an underlying asset, which is the dollar. It's pegged to the dollar, right? And if the underlying is fluctuating, if there's volatility in the underlying, then automatically the value of the coin, the stable coin, would be affected. Now, in this situation, that is exactly what is happening. We see that the underlying fiat, which is dollar, right, is in this situation based on the deposits that USDC has with the bank. So USDC has, which is Circle Internet Financials, I think that's what the name of the parent company is, has about 8% of their deposits in these banks, right? In at least Silicon Valley Bank, we know about that. If their fiat, the deposit in dollar, in currency, is at risk of being gotten back or being retrieved, then there's a risk that that value would not be obtainable anymore. So there is some volatility happening there. Now, as a result, the ripple effect, and I would say the fear of that portion, and maybe more, we don't know how much the exposure is, the much we know is what we've been told. And as the days progress, we would hear more in the media as the investigations go on. We would see the outcome of things and the real extent of the situation of things at the moment. But we know that a portion of their deposits is currently held by these banks, right? Now, they are stable. The coin is pegged to these currency, to this fiat, to the dollars, which is the deposit in these banks. Automatically, the likelihood of that coin retaining the value of 1-to-1 is at risk. As at, a few days ago, it had depegged to about 0.8 to $1. Well, it used to be 1.1, so now it's 1 to 0.8. How stable is stablecoin? Stablecoin is backed, is pegged to something. It's in this situation pegged to fiat. So, I mean, sometimes it's pegged to gold, depending on the commodity, it's pegged to. So, by and large, there's an element of risk, right? But significantly reduced compared to the volatility that a traditional cryptocurrency that is not backed to anything would be exposed to.
Thank you, Tolani, for that. Faith, let's get to you. Just as we wrap up today's episode, we have seen Bitcoin pump in the last few days. Is it safe to say that the issues with Silicon Valley Bank is the reason behind the pump? And if not, what is the reason behind the recent crypto pump? And are we washing into a bull run right now? So, Faith, let's get your take on that before Tolani leans in on that too.
Well, as it is, people have actually lost, confidence in the traditional finance industry or system. And like I said earlier, they're actually, resorting to looking out for, safe haven assets. So, and a lot of people see Bitcoin as a safe haven asset. So if as a person you were able to have your money, deposited in the traditional banking system, and at the end of the day, your money, were not properly, managed, and at the end of the day, you were not able to have access to your fund. So you can see that you do not really have authority over your money. So why would you want to, put your money in a system whereby you do not have authority over it? So you would rather look out for, alternative financial systems that would really gives you that opportunity to be able to manage your fund, to manage your money, to have access to it as at when due, without any central form of authority or without a third party, trying to tell you how to manage your money and when to use it. And sometimes even when you want to access it, you don't have access to it. Just like what we have actually experienced in the SVB and Signature Bank scenario. So I think that actually made people to come back to the crypto market to be able to buy more of those assets, which is Bitcoin. And again, I think what actually led to that was as a result of Biden, the United States president, reassuring customers of people that their money is safe. And but then um, you really cannot trust that your money is safe, that you can have access to your money as at when due, because a certain president has actually reassured you that the money is safe, being the fact that, in United States, the FDIC, which is the Financial Deposit Insurance Commission, where they already have like a peg in depositors' funds up to about $250,000 per bank and per person, right? So if, for example, you have more than that amount in your account and you cannot really have a total insurance of your money, that whenever anything, should there be any crisis, that you'll be able to access 100% of that fund, so you should not be able to, trust such a system. You should be able to come back to a system that gives you leverage and that you have total assurance that you can access your fund, 100%. And I want to also say that perhaps most of them actually believed on the reassurances of Biden, but then you really cannot. We have to understand that the financial health of any bank operation cannot be influenced by the assurance of a certain US presidents, right? Because there can be different shocks that can make, markets to be stable, or that can make your money, to come out at any point in time that you would want to. Because Biden had actually made that promises doesn't really, assure that at the end of the day, if you have XYZ amounts in the bank, that you're going to have 100% access to that fund, given the fact that only a certain limit of funds are being insured by the FDIC. Yeah, so I think that actually resulted to people coming back to the crypto market to, be able to buy more Bitcoin. And again, let's not forget that CZ had actually promised that he was going to release, or actually he did release about, I think, $1 billion into the crypto market, which he actually converted to Ethereum and Bitcoin and BNB. So that actually also contributed to the pump that we experienced in the crypto markets these few days.
Tolani, are we heading towards a crypto bull run, or this is just a facade or a bubble that is going to burst really soon?
I mean, the truth is, the coming days would help us to ascertain that. I think people are generally running towards a safe haven where they can control their funds, like Faith rightly mentioned. The pros, I mean, the advantage of cryptocurrency generally are decentralization, where you don't need to rely on any central body, any bank, to have control over your funds. We would see how things pan out in the next couple of weeks, like I said. But I know that several factors determine the outcome of things in the financial world, right? A combination of micro and macroeconomic factors, right? In the past, we had things like the pandemic, which we had no control over, for example. So it'll be difficult to say that this is a facade or this is a run. But I believe that, there are typically cycles. And if you've noticed, I mean, the cycle is moving towards a run, right? It's usually in a 3-yearly cycle, sort of. And I think we're about to get into that space. Now, having said that, there's an element of risk involved in everything we do. We win some, we lose some, and we learn lessons along the way. So in the next couple of weeks, months, year ahead, I believe the Bitcoin market, the crypto market, will pick up, and we've learned lessons from the challenges we've had, in the past, and more people are definitely more interested and more committed to putting their funds where they have absolute control over it, without government interference and bailouts like we would see in the next, like Biden has promised. We'll stay tuned and see if he's able to hold true to that promise.
Thank you, ladies, for joining in today. It has been an amazing time talking about this very important conversation. Make sure to let us know what you think about the Silicon Valley Bank collapse, the Signature Bank collapse, and how it has affected you as an individual and in the crypto industry. Thank you so much for joining in, Faith Okafomba, Tolani, and also Maria. Thank you so much for joining in.